This is like my favorite business of all time. I just love how Constellation Software were able to delegate responsibility of the acquisitions all the way down the hierarchy. So this very decentralized acquisition policy of niche software down to their managers means that the people closest to that area or that niche or whatever it is, or the relationships they've built, they've been able to make the acquisitions. And in 2023, they'll be able to spend, they've already crossed $2 billion in acquisitions just for the year. Last year, I think it was 1.5. The year before was like 1. They just finding a way to keep spending money on acquisitions, and it's all their free cash flow. It's incredible. And I imagine like 10 years ago, investors would have said, oh, it can't keep up this pace. They can't do it for another 10 years. Well, that would have been very wrong. I'm not going to go into the intricacies of Constellation Software, as look, they're the king of serial acquirers and there's a lot of write-ups out there. But my best guess is that I'm going to back them to find a way to keep growing at plus 20%. I'm actually going to call it 23% per annum. I think they can pull that off for at least another 5 years anyway. So today I'm just going to show you simply how I calculate that expected return for the next 5 years. I update this in yes stocks, no stocks. There's a link below in the description for that. It comes out each week. It's very easy email to open and see where we are at regarding valuations of a handful of companies, not just Constellation Software. I think you're going to find it worth opening. Okay, this is a really simple spreadsheet. You could probably do this in your head, but I needed a spreadsheet to do this. But anyway, here we go. What all I've done is I've just extrapolated out the revenue for the next 5 years. So I've got the current revenue number and grown that out at 23%. Next, what I'm assuming are the margins are going to be about 18% for all that free cash flow that's coming into the business from all the subsidiaries. And then I'm getting the 5-year target revenue number and multiplying it by 18% to give me a future free cash flow number in 5 years' time of a little over 4 billion. So they're about, I think they're somewhere closer to 2 at the moment. So I'm saying it's going to be closer to 4.5 in 5 years' time. We're putting a 25 multiple on this business because of it's like the best business ever. So 25, I think, is justifiable. And that gives me a 5-year target market cap of a little over 100 billion, which is pretty epic. The dilution rate is 0 because that's what they've always been around about. I think it's a little bit higher than that, like 0.5% or something, but it's negligible. The shares outstanding number at the moment, the current market cap, and it's saying that a 5-year target share price is going to be around about $5,000. So that's just a ballpark. So I'm not saying it's going to be exactly this number or anything like that, because the multiple could be higher or lower or something like that. But I think this is a pretty good estimate of where it could be in 5 years' time. We could probably say comfortably that it's going to be somewhere between 4.5 and 5.5, or even 4 and 6, like 4,000 and 6,000, somewhere in that kind of range. So I'm saying it's right in the middle at 5,000. And depending on where that sits, if we're looking at 5,000 from today's share price, it's about a 12% per annum compound annual growth rate from here. So if that's attractive to you, it's significantly better than the bond rate. It's definitely better than indexes and things like that. And this is one of the best companies of all time. This seems relatively attractive to a lot of people. I'm chasing a little bit more than that, so I'm happy to wait. Unfortunately, I've been waiting for a long time for Constellation Software, and that's going to be the problem. Maybe they can grow it at faster rates than 23%. Maybe that multiple is going to be closer to 35. I don't know. So then I'm going to miss out on a 20% per annum return here, but I'm okay. I'm going to wait for the price that I want to pay, so I feel safe about it. And yeah, that's how I do a rough valuation of Constellation Software. And when I do finally invest in Constellation Software, I'm going to use Interactive Brokers. That's my broker of choice. Link in the description for that if you want access to international stocks. Constellation Software is Canadian, of course. If you don't have Interactive Brokers, if you already have another broker, I think you should have a second broker anyway, because you don't want all your eggs in one basket. Split it up. It's smart. All right, I know that was simple, but I still hope you've enjoyed it, and see you in the next video.